Good morning, good afternoon, and good evening, wherever you're joining me at this moment. Welcome to 230th edition of Investdata Trading Academy Live with Ambrose. Yes, global market as we speak are looking in the southward direction. You can see the reaction and the expectation of investors as the news from the Fed chairman, has driven the market, and also the data coming from China, and also market reaction to those data. These are the factors driving the market in this direction. But for investors across the globe, no matter the instrument you are trading, either you are trading equity, you are trading currency, commodity. I think this decision of rate hike and also the data coming from China has continued to drive what sentiment. And that's why I tell investors that the volatility in the market will continue, not only because of this information that coming, as also the political tension that is also geopolitical tension that is also going on in Russia and Ukraine. It's not also helping matter. For that, you must look at the sector where you are positioning, the industry where you are positioning, and also the individual stock, where do they belong to, and what is happening in that company. That's why you can see that earnings is very, very important, and how also market react to this corporate action that comes from these companies are also a good thing that investors should look at. But like I always say, anytime in this class, even on other forum, that investors should trade their plan. As you know, enter into any market position, the one you are entering, as you are taking position to buy that stock, putting your stop loss is as important on picking that stock, either for dividend purpose, for trading purpose. Also, add your what your stop loss. At the end of also, you know your exit strategy. That means you have your profit target to know when you are exit that position. These are very, very key. That means as you are buying, you already know your buy range, you know your profit target, you know your stop loss, you know how long you want to stay in that stock, and also you want to keep your eyes on the stock because you have already looked at your what you already look at your fundamental, your technical, your sentiment, and your perception of the people in the market. And also, it's also very, very important. Look at the personality behind this company, and these are things that will always guide you as an investor to know exactly what to do when it comes to what investment. Like I said, the global market has opened on the red side of the market. Why I said so? Because if you look at the three major indices in the US market, I will tell you as to speak at this hour, they are very, very in red. What I mean, I say they are in red, they are looking down. And also don't forget that the chairman of Fed has been in the news this week, appearing before the Congress, both the Senate and the House, trying to also discuss about inflation. This has also influenced market movement up and down to remain mixed. But this morning, see that market have given up to start on the downside. But we're looking forward that this market is just starting. Let's see how far it will go before rebounding. But also, if you look at this market movement, it tells you the impact of this economic data, policy statement, direction, all this have the work of influencing the movement I've said earlier. But the good thing is that you as investor or trader, you must know how to put all this into cognizance when you are taking decision because they have power to influence your the price movement that you are looking at because every investment you are doing is against the future. And for us that trade stock, you are investing in assets that want to move in the upward direction. When the assets you are buying or the stock you are buying start moving down, automatically you are already looking at what losing your capital or your capital is just kind of depreciating because it's going down until it rebound again. And that is why you must look at some factors before you jump into any position. And also timing is very, very important. When you are looking at price, you want to look at the time, the thing you are buying, and where it's going from there. That is what is happening. As far that this no outcome of the meeting, I've also point that the Fed chairman is also insisting that the continued rate hike is still ongoing for them to work to fight this kind of what called the inflation. But on the other side, also they are also pointing out to him that yes, if you continue to work to hike rate already that the economy is not expanding, and also if you look at also the new job that was created in a in February, this also support because we are seeing job created. That means less people are unemployed, and also this also supporting what the Fed increasing rate. But if you look at the activities of the economic growth remains below 3%, and that also if you look at the business, activities for this domain for almost like 8 months, and it has also remained what below 50 points, which is also sign of contraction. And if it continue, no, that will not, no, that will affect the economy going to the future. That's why the Congress has called to look at where you're going, what about for those that are investors in the market analysts are also saying that as far as there's a slowdown inflation, that the equity market will still make as high as 20% in that domain because they understand their terrain. And also on that note, the companies also reason results that are also supporting this their earnings, they're supporting the price of this company, price of these stocks in that domain are likely also to impact positively on the stocks in that. But if we look at in Europe market, where I said earlier, all the market Europe stock has opened lower as a result of what they're also looking at to see that what happening in US also have the way also influencing the activities. As they digest the, as I said, the latest data that came from China as regard the inflation figure, which also shows that the recovery in the China economy has been sluggish. It's not as sharp, no, as ever. Good that it's not on the decline, but recovery is still slow, and that also affect being that no. Germany is the major exporter, to that country. If the economy is not expanding on a, on a speed, it's not expanding on as level expanding with speed, it might also likely, affect. If you know, that is where the economy there can, because they export to that to country, because that means what is happening in China has the way. These are what they are interpreted, and also like I don't tell you here, when you see a company delaying numbers, their number that's going to do it also say a lot of concern. Also, investors are concerned that that the credit Swiss bank, delaying their result also. They also are looking at that the result how it come, and being a financial institute, they're also looking at what is happening, the health of this company, why the delay in their number, and also their set also referring to back to see the cash flow of this company, Swiss lender, to know what happened in terms of their cash flow, their cash flow disclosure review of 2020 and 2019. No, and also why the results have been delayed at this time. You can see that's why in this class, when we are really looking at the analysis, the corporate action, corporate earnings, I tell you that it's not only good to look at the robust, balance sheet and positive, positive, P&L, profit and loss account. We need to look at, the company cash flow is very, very important to see if the cash flow will support the future. Because since every investment you are making for the future, we need to look at what is the company that will sustain earnings, because any sustainability will support what payout, and that will also support the price at the end of the day. These are the things that's happening. This is also driving the mixed sentiment in that market. But as we speak now, I will tell you that the market in that zone are in red. Starting to look at what is happening, in Germany. Germany is down by 0.1. Then we're also seeing that if you look at France, market in France also, the market in France, stock market in France is also down by 0.4. Also, look at that one in UK, I say the FTSE is down 100, is down also by almost 0.6%. You can see what is happening in the market. And Asia market is not left behind, but Asia market continues to oscillate as we speak now. But the good thing is that oil price remain a bit stable after pulling back from as high as $86, 7 to 82, around 82.6465 diamond, but it's still relatively unchanged and flat since yesterday as a result of what the news of the Fed going to hike rate, and also this data that came from China, knowing that China is the most how would I put now, the second largest economy that that depend more on importer of what of crude oil. But if the economy is slowing down or is recovering at a very sluggish pace, that's also what's keeping the price of oil in that. And what is also happening in Europe is not helping the matter. That means you as investor you need to also look at it. But I will tell you, in all this, more analysts are still forecasting that 2023 we're going to see oil price above $100 on that range. But if that happens, I'll tell you, for those companies in that sector, that means the earnings we have seen in 2022 or 2021 is a continuation what in 2023, because price that remains relatively stable, and also the opportunity of more business is also coming for that industry, especially the oil and gas, the crude oil, and also oil. But down here in Nigeria, we're also going to know that because of the expected reform of removal of subsidy, how it's going to play out. Already, what has happened in this, the last 3 months when we have fuel scarcity, we see prices of changing on a daily basis from one year. That also has also impacted the numbers that we have seen for 2022. That most companies that release unaudited accounts from the oil sector, we saw that their number was what impressive. Market reacted to it. That is why when I'm not surprised seeing that sector correcting now, because most prices in that sector have rallied. Why those that also expect to pay dividend, that will be more attractive are yet to move. That is where investors should be looking at this time, because those that move up are correcting now. Because if you look at the price they are now on the NS, no matter what they're going to pay, the yield also will not be too attractive. That's why as a comment down now, it's become attractive for those that are income investors to enter. But why those that are also traders will also catch their profit as we speak. Yes, I've said look at what is happening in African market. African market is made as we speak now. NGS is in red. I can see that despite the positive market red, NGS is as a result of what big cap stock pulling down as a result of investor taking a decision on where to go for dividend. But I will tell you that the market is now forward for dividend investors, and that is what is supporting the market now. I will tell you that back here in Nigeria, despite during the week, the news of the election that is coming and the and cash crunch has been there. But I tell you that despite the postponement of the election to next Saturday, that's not on the 11th to 18th, and also the continued cash crunch we are still experiencing, despite also the outcome of Supreme Court and CBN, and also directive where to know where the economy is in terms of cash. We expect that all this will going to happen, and from that, we want to see the market oscillating as we speak. For me, investors in the market should not panic, but rather target to your dividend income stocks and position on time. And also look at your yield before you put it. What is the yield? And yesterday we saw also what happened in the treasury market, that's the money market. We saw that there's also an upward movement again in rate. We saw that the 90 days has moved to 1.44% for 91 days, and 182 days has moved to what 6%, and for the 10%. And this is also for me is a big task for the equities market at this time. But the good thing is that as far as this company any yields remain above where what is the for me, like I said, that average yield in the market is around 6 point, and that is what to stay forward for 182 days to get interest rate. But if you can get in less than 2 months, that's also a plus for the market. And also you can make more than the 10% that for 303 if any stock that also give dividend and capital appreciation. You see, that's why for those that are really not served by the market, you know that there are some stocks and sectors and industries that where you can get more than what in the treasury pays. And for those that are risk averse, nothing stop you for looking. But I told you last time or most of my that those people that play the market are more of the banks that have big money that flow all this fixed income and also more of one. But for retail investors that are still growing their money, yes, don't need to waste time. But you see the market direction, you can also work for the diversification of your portfolio. But at this point that you are income investor, I think the equity market still remain the best way for you to work to catch your dividend stocks on a shorter time and also get good return. That at the end of the day, you also will be smiling to the bank, because that is the essence of you investing. You are not investing to look at the face of people in the market. You are there to make money. If that is the ultimate, I think nothing stops you for taking position in those stocks, especially those banking stock. We are still expecting the results to hit the market. That will go a long way to guide you, so that at the end of the day, it becomes what? It becomes a good entry point for you to be there before the results are hitting the market. Because when the market is about to react, really, if on the strength of their unaudited account and they were seeing the performance, if there's a growth in their demand products, most of this banking stock, especially the second tier and the first tier bank, we expect to see dividend that is encouraging. And if that happens, that for me is a good one for investors to move in that direction, and that is a good way to go for those that are in the market for dividend income. For we traders, I'll tell you, the market is a creating opportunity for us also to take advantage of all of what is happening in the market, to take profit, especially if you are in the market. We saw this morning, yesterday, that Dangote has announced SEC has approved Dangote share buyback that will run between now and the December 12, 2023, and the mode has not been spread out there. And apart from offering to the opening market, the percentage they are buying has not been spread in that publication. But for investors, it's a good one. And also, this is the time for you as an investor to look at, this company is going to buy back. What is the strength of the competence of their result? Is it enough to, because what it means that if you are buying back your share, you're not going to inject money from it. It's what you have in your balance sheet that you use to buy your share and cancel those shares. that will make your price stronger. And also, this is a best practice all over the world. It tells you that Dangote is standing out in the market for continue buyback. That will add value for those that are in that stock. And also, at the end of the day, the earnings of the bank will become stronger. For me, these are good things. And also, yesterday we also saw the MTN, circular about concluding their word, incentive word, bonus they are giving to them, which is good. And don't forget that the sector where MTN is operating, I tell you, MTN, telecom sector, banking sector, industrial goods, and agriculture sector, healthcare. There are a lot of sector, energy that I know that in this 2023, there are a lot of opportunity for investors. Don't look at what they are doing there. If you're a long-term investor, know what you are doing. But if you are the type that I said you have a consistent good strategy that you are there for short term, you are moving here for you go in and out. These are the things that we're looking at. Good sector will like take advantage of low price because expectation of what to happen, especially as we're expecting that despite the court case we're in there, already we know the direction we are going as a nation. President-elect is have been finished, have been finalized. Sorry, I will say that at the end of the day, court on everything will put the final touch to it. Once we know that there will be handover by May 2029. That until court issue before then have been completed before then. I believe that this is also going to support the market. For now, there's no cause for alarm, but the oscillation we are seeing in the market will continue because post dividend adjustment also affect the market. That is why as the corporate action dates are coming closer, expect up and down movement. Saw what happened in Dangote yesterday because of that news, and also as recap has continued to recover because we're coming closer toward the markdown date or the profession date. These are the things you want to look at the market. I believe that for all that are in the market for profit, you don't need to panic, or rather know when to take profit and at the same time when to hold cash. It's very, very key because we work with opportunities for market to pull back and buy, and also know when to take. What that's why in the coming master class, catching the top and the bottom is one of the strategy that we're also going to review, especially as we're going into post-election year. And also at this coming Saturday, we have a guest speaker that we're talking about how to work dividend investing using what using corporate action and dates. These are the what our guests will be will be discussing in coming Saturday. I mean, for those that are not in that platform, that premium platform, I will encourage you to come and go ahead and pay your money between now and Saturday afternoon so you can participate. Then at the same time, for those that are in that premium class, you know that as a master class is coming, you're enjoying a 25% flat discount for those. But for those that are not there, like I said, you still pay the amount of 50k for one. Those that are already in that class are already part of the house. They have 20% flat in all our master class for the year. For me, it's a good opportunity for you to catch because you continue to take advantage of knowledge shared to boost your worth, your confidence, and also boost your worth, your bottom line at the end of the day. Yes, we'll come back to the market now proper to see what is happening in our local market. As we speak, I'll tell you that the market is still in the red, although market pulled back from also yesterday after the market rebounding powerfully yesterday to gain about 3.5% yesterday. At this hour, market has pulled back this morning, trading at 55,672.48. Market is down now as we speak by 158.06, down by by 0.226 as we speak. These are the 0.26 is the one. But if you look at the market rate still remain positive for having 8 gainers against what against the 5 losers in the market as we speak now. For me, it's a good one. I can see that investors are taking advantage of those stocks that are gradually presented to take profit, and while others are still looking down gradually. I believe that once all this profit taking is done, we expect to see market rebound also. But this also put back also opportunity for investors to take advantage for those that are looking for dividend income. If you look at the gainers, losers start from there. I think that NCR is leading the pack there, down by almost 9%, followed by Corn Oil. We are seeing can't forget that for the past 2 days we are seeing Miss Oil with RMS going down. Today we are seeing also profit taking in Corn Oil, Lasaco, Etana, and MTN. These are the why that the market is in this position right now. Then if you look at the gainers as to speak, Transcorp is also at the top there. We're seeing Transcorp leading there, followed by by Jai's Bank. These are the ones that are on that category. Like I told you earlier, we have already 8 gainers at this hour, and we're seeing that market is still changing. Before the day, we'll see exactly what we're seeing. Transcorp, that I mentioned earlier, his bank. We're also seeing Dangote Sugar, on that category. On the top also GT code. GT code is also among those top. Then almost 26.50 now. After 26.60 this morning. Also seeing a cap there. These are the top 5 gainers. Others are in that category. Like I say, 8 against what? Against 6. That tells you the market is still likely in having a positive break. But if you look at the in terms of volume, Transcorp is leading this now. We have about 63 million shares traded so far. And this is a company that's getting to more than 9 days now. They announced their result is ready, and they'll probably honor before what? Before 1st of March. Today is 9 already. We have not seen Transcorp. And like I said earlier, when I was looking at the global market, when a company delay result, it sends kind of signal to the market about the result and also what is happening, and that will also send the price going down. You can see that no matter how Swiss lender, the credit Swiss financial, because the delay in result, you can see that the price is also coming down in that market. It's all over the world. It's the same sentiment that investors display when a company result is due and that result is not out. Let's look at cross for Transcorp. Transcorp is leading this morning with a good volume about 63.3 million shares traded, followed by GT code 24.6 million shares traded so far. Zenith Bank also 26 naira, flat, 26 naira flat, trading about 5.39 million shares this morning. Then also looking at Jahis Bank in terms of volume, it's been also 92 as we speak now. Kobo 30.8 million shares traded, and followed by Dangote Sugar just 2.8 million shares traded at this moment. These are the in terms of volume. These are the top creators of volume. Here's quick one. We want to go back to see what the market is doing, and this is what I want us to look at this morning as traders, because this is a live class. When it comes to looking at the chart when we are trading a live class, and we want to look at the market as coming in, first of all, analyzing the weak price structure and also our price action is also very, very important, because there will be possibility of changes. It will point to whether it's possibility of changing in direction or a shift, and that is why after looking at the weekly chart, or start from a 1 hour chart to look at the daily, also look at the weekly. You can start from weekly down to daily to 1 hour, because it's a live class we are doing, and it's for the day. What we're looking at weekly to see the expected change on a weekly chart, but when on a daily chart, look at what the market is doing. You go back to look at what your 1 hour chart, and as low as also looking at even 15-minute chart to give you a clear direction. That's why looking at market direction, possibility of a shift in that direction is very, very key, so that it will guide you. Yesterday we saw that the market rebounded this morning, that yesterday, but this morning we are seeing a reversal. It now becomes important for you as a trader to see if the Asia index, as we speak now, is going to make a higher high or a lower low, or going to pull back from this level. And that is why if you look at this chart now, see I drew what we call a trend line. This is a trend line now, pointing that the market is still making an uptrend. That is the implication of this trend line, because the index action is above the trend line. But when index action is below the trend line, it's a sign of what? A downtrend market. So that you also put it as a way of knowing what is happening in the market. But now you want to look at what are the key levels that is very, very important. This key level is very, very key. The key level, I saw that this is what I call a resistance level, the line that is up, and the other one down here is called a support level, and this is what we call a kind of a consolidated market, or a choppy market, or a side trend market, because it remains within this rectangle movement that has not broken out. Either the market, I would say that the market is side trending or consolidation at this point, waiting for a breakout. Once market breakout, the last highest touch, it had about 55,984.48. That is where, and also pull back to touch around around the 55,340 something. You can see that is where this one touched before coming. You can see that this range, the market has remained at this range, and these are the key level. One for the upside, and for market is still trending, because we are having a trend line like this. They become a major trend line for you to see if there's a breakdown of this trend. It's also a confirmation of that trend. But you can see that the market does rest, the price action is just resting, index action is just resting on the trend line. Does not broken it down. Once broke down, it confirms a trend of what? Of a breakdown. But the major one I look at, what is the strong support level here, and that is this green line that is down here. The resistance level is at this level. You need to look at it every time you're in the market to give you a sense of direction, what the market is doing, so that you will play safe now, in that market. But as we speak now, I've not called an indicator, but I'll tell you that market is still very, very strong. Even what the market gained yesterday, as to speak now, market has not really taken it out. But the longest candlestick here remains strong, because all this happening has not gone above it or below it. The kind of market is what on the sideways or a chopping movement, or call it a trending or ranging market, anyone want to call it. But the good thing is that the market is still very strong. It has not broken down the trend line. That's why trend line is very, very key, because this key trend line, that whether there's reinforcing of a target, or the target zone. Like now in this market, our target zone is looking at the 56,000 mark. Yes, I will see in that range. Yes, because once the market break out this resistance level of 55,984.48, that is the market already at what, 56. You can see it here. The next target will be 57. But you can see where the market is now. Once this zone of 56,000 mark, well, that is where all eyes now. Once market get there, but the market will pull back, because I told you post-war dividend adjustment is also underway, because as from next week you see there will be a price at qualification date, and markdown date will also be coming up the end of the month and early April, where we'll also be looking at to see the Q1 number for 2023. On this note, we want to call on more the indicators to look at some stocks that are already there. But if I look at here, this is the volume here. You can see this volume that's under. You can see that the volume in the market is relatively low. You can see that all for this while market are remained below this black line. The volume have not crossed it. That means we're having a low traded. Once it crosses, that is above average. But as speak now, market is less than average traded volume so far. Let's look at all other indicators to confirm some trend for us. Today we're looking at what I call ADS. ADS is one of the things we continue this morning to see the direction of the market, so that it will help us to see, to know exactly what is happening. Then we'll call our money flow and T line. Don't forget that this money flow must give us an idea of where fund is entering. Is fund leaving the market, or fund is entering the market? Your T line is for you to catch the top and bottom. We're looking at other indicators. But to know when the market is strong, and also when the market is weak, it's very, very important that we note all this. So it will guide our decision anytime we are taking decision in the market, as investors or traders in the market. These are very, very key important things that we should also know as a trader in the market when it comes to what taking an investment decision. Yes, this is our T line is the blue line here. You can see it yourself. You can see it now. Market, even at this, our market is above the T line, so that you get it clear. Let me bring it here so you understand what I'm saying here. Look at the T line. You can see that the market is above the T line. This is the T line here, the blue line here. Why it's a trend line? You can also look at it very good here, where the touch and also where this one touch. You can see resistance and the support level. I think that the volume was speak now is relatively low. I can see that market is red, yes, but you can see the volume and the money flow is still also looking for me still flat around the 62. Fine, that means market is going up. Volume money is coming in the market. That's why pulling back, because can start yesterday market was around around 60.85. For this one, we're seeing the market, money flow reading at 62. The fund is also entering the morning market gradually, which is a good one for the market. Yes, back to this market, you can see, and I want to show you that this our ADS. You can see that market since a crossover here, the blue one has remained up, and the ADS as we speak is almost 55.17 above 50. For me, it's a good one. And I told you that once you see ADS around above 20, to tell that there's strength behind that trend. For you to see ADS reading 55, this tells that there's momentum in the stock. And also, if you look at this blue line, you can see that it continues to roll to stay up. Even when it tried to come down, it didn't cross the red down. You can see it's moving. That was at this point. Came down, continued to move up, and you can see that it remained in up direction. Yesterday, it moved up, but this morning, you can see that it's coming down again. You can see this time between this the red and the blue. Like I said earlier, money flow is already looking up gradually. You can see for today, you can see that money flow looking up from 60.85 yesterday, reading almost 62-63% already. It's a good sign for the market on a daily chart. Like I said, you look at the weekly, look at the weekly and look at what the daily and move to 1 hour. Look at the daily. You can see on the weekly chart, market remains very powerful, strong. You can see, your blue line. You can also see that your ADS is reading almost at 33 on the weekly chart. For me, it's okay, very powerful. Let's look at the 1 hour chart for the market. 1 hour chart also, market is flat, it's exactly on top of the T line, not looking down on the 1 hour chart. And also you can see that here, you see that the ADS remains strong. Even you can see the blue one, even with this one reading at 28 point, no, the ADS read 20, oh no, reading 31.36. For me it's okay, but money flow on a 1 hour chart is still looking down below 50, around 30. Okay, let's keep our finger crossed. Yes, from what the market we have seen now, let's look at a few stuff that we cannot look at their charts before before the time is is up. Look at those stuff now that before the time. Let's see what we can look at now. Yes, we quickly look for those stuff that are we are seeing that volume are there, and also those that are also making the top gainers. And we look at one here gainers and one loser. Quick one, look at the strength that's coming back to recap, and also quickly look at what is happening to MTN also, or look at MTN or corner oil, how far corner will go on this graph, because we'll see that there's a pullback in corner oil, pullback in what in internal. But let's look at the corner oil and the and recap quickly. We see then if time of for volume, we can quickly look at the GTB. Look at recap for those that are on the gainers chart this hour. Because of our time, let's look at we'll discuss more on this by Saturday after having a guest speaker to tell us no more on how to invest for dividend, even as we are seeing an uptick in the treasury market, what made the dividends to stand out and why we should different. If you look at the chart on the 1 hour chart for UCAP, I will tell you that yes, it's trading slightly below the T line, and then also if you look at, you can see there's a sign of weakness here that the momentum is not as strong, but the blue line is below, while the red one is still a sign of weakness too, and that is what you are seeing here. You know, when it cross over, I can see it here from here. When it cross down here, I can see it here down here, and it continue and it remain up there, and that has been our money flow is also looking down on the 1 hour chart. For quick one, look at a day chart, what is happening in UCAP. UCAP is flat on the T line now, but also I see that momentum is not too attractive. That's why the volume is also coming down stuff. Here it's slightly in green now, you can see it here. But I'll tell you on flat on the our money flow is still reading 52, which is relatively good. But I'll tell you that ADS is also not too strong, because we are seeing that the 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 weakness, sign of weakness in momentum. Despite that, we are seeing the gain here. The slight gain, the momentum is still very strong for this stock in terms of looking at ADS that give us the strength. Yes, you can see that it's strong in coming down, but for me, it's a weak momentum as we speak. The lastly for this one, look at the weekly chart for UCAP. What is it saying? For weekly chart, it just tested the T line on the weekly chart. You can see there that it's also, for me, it's also looking down. You can see it here now that my this can confirm it now. I can see that the blue across the red down, and that is not for me. It's not the money flow still looking down around 57. But let's see, because of the dividend that's coming up. For those that are income investors, they need to panic. But let's keep our finger crossed for UCAP. Here's the next one here. We're looking at, let's look at corn oil. We have seen Miss Oil performance in the last 2 days. How low will corn oil go? For those that are traders are able to take your profit, you can see here already on the chart, on the weekly chart, I give you a sign. When you have seen this sign, this first one for last week, this for this week already in red, and also see sign of weakness. And I told you, whenever you see that your candle, your price action is far from what the T line, the sign also you can see getting to this top, started coming down. I can also see that the momentum is also changing, looking at still strong where it is, but it's already a sign. Money flow is still very strong around 90, but already there's a sign of profit taking, and which is also reflecting into these activities. Look at the 1 hour chart also to give you a clear direction where how far the profit taking is going. And you can see that the stock as we speak now is below the T line. On the 1 hour chart, you can see, and we are seeing that the weakness are already shown here. You can see that the momentum ADS line is already below 20 for me. Let's watch it very well. For those that are profit, you can see what take a profit. But for income investor that want to wait on a pullback because of their earnings of almost 4 naira 58 kobo, to expect a better dividend. But at the price now, it must come as low as 30 naira if they are 20 naira to become attractive. But let's keep our finger crossed for the stock. On a day chart, you can see that it's right below the T line. In the last, you can see it here, it's coming down. But ADS is still very positive. Around 64, you can see it here. and the money flow is looking down straight around the 51, still looking down. No, for me it's okay. So I will look at what is the week chart. Of look at the week chart. The last but not the least, before the time first, let's look at what is happening in GT code. GT code. In terms of volume, you can see that this amount of stock that are reading in volume. Look at GT code. Oh, time is fast spent. Yes, GT code. If you look at the chart before we call it today, GT code is on a weekly chart, is above the T line. We are seeing strength there, still remain positive. Look at the daily chart. The daily chart, there's a move that I see here that is good for me. You can see that getting to where is turning up again. This is a good strong trend returning to GT code. And money flow looking up around 59, and you can see that above the T line as we speak now on the day chart. Finally, look at the 1 hour chart. The 1 hour chart also, for me, the 1 hour chart is also not looking bad. Yes, there is a sign of weakness in 1 hour chart also. You can see it here. Looking at this, the money flow is still looking up around 75. On this note, we say thank you and see you tomorrow.